Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of Finstrat Management. At Finstrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast, and I'll share how you can be our next guest. Now, on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Really excited because today we have with us JT Benton. JT is the founding partner of 9.8 Collective, as well as general partner at the Be More Venture Studio. JT, welcome to the podcast.
Hey, thanks for having me. I'm a founding partner, not the founding partner of the 9.8 Collective. I don't want to get any of my partners upset at me, but
all good. But hey, why don't we start there? I'd love to learn more about both 9.8 Collective and Be More Venture Studio and what your guys' focus is.
Yeah. So really the central theme of each would be the concept of a venture studio, which is a company that creates companies. So it differs from an accelerator or an incubator or a venture capital firm in the sense that the ideas are created typically in the most sort of strict definition of the model within the studio, and that the studio would build that venture, take the early risk, assemble the founding team, and bring it to market, de-risk that venture, if you will, before it spins out of the studio environment. And so my work over these past several years has really been focused on that type of utility, that venture building utility. The 9.8 Collective is a firm that I started with three other partners, Blair Merlino, Evan Allen, and Neil Ghosh. We met running what began as an incubator and then turned into a studio in Boston. Was affiliated with a university out there and one of the local venture capital firms, and really in that process caught conviction on the model and the team, right? So wanted to work with these guys forever. Since then, we've been able to sort of orbit into relationships with other studio operators and studio experts. And so Be More Venture Studio is one that's certainly like very near and dear to my heart because it was started by a dear friend of mine, Jason Goldsmith, based in Baltimore, 3-time exited founder, came to us and said, hey, I don't want to just start another company. I've got a few that I have in mind, and I have this model for investing my own capital, de-risking them, and then taking them to market. And I said, yeah, man, that's a venture studio. And he's like, yeah, I think so. And so we were very, very fortunate to and remain fortunate to have stood that up with him and built that with him. So that's another studio that we're involved in.
Fantastic. And for the members of our audience who are not as familiar with the model, what's the breadth and scope of nurturing a new idea to market?
Sure. Well, I think where it begins is really important because there are venture building utilities that begin with an idea outside of the building and is then brought in. That would typically be an incubator or an accelerator, where a studio is a little different, again, in the purest sense. And I'm not like a taxonomy wonk. So, if you're a founder out there with a great idea, by all means, I still want to hear it, right? But where a studio begins is with a thesis or a sort of a problem definition that they're looking to solve. And then the team will go out and innovate and iterate on concepts that would go ahead and address that thesis or that problem. And so from there, concepts are formed, right? Business concepts are formed, and they're taken through a very rigorous process of filtering and examination and analysis to see, which are the very, very best concepts that should be launched against this thesis or this problem. So a venture studio might launch between 3 and 7 is kind of the sweet spot, 4 to 7 maybe ventures a year. And they celebrate success, but they also celebrate failure, right? They are willing to say, hey, this is what success would look like in the earliest stages of this venture. And if we don't hit it within this sort of within these operating parameters, time, capital, size of impact, then we're willing to go ahead and shut that down. So that's another area where a studio would differ. But essentially, a studio's job is to operate against, first of all, define the thesis or the target, and then build investable plans and launch those plans against that thesis and bring them to market, prove product market fit, establish sound unit economics, and get that venture to a place where it is really ready to graduate, matriculate out into the big wide world with a tremendous head start.
What does the ownership structure typically look like between the studio and whoever may be leading the company?
It's the hottest of topics. It really is. And it varies, right? There are some really well-established venture studios in the biotech space, for example, that have been known to take as much as 50 or 60% of the company, or in terms of occupying that position on the cap table. Other studios are, taking a less than 20% position in the venture. I think, what is right will depend on the level of de-risking and the amount of capital and time that is required to nurture that venture. So, in the biotech and hard science space, the folks who launched Moderna, right? Um, you know, those clinical trials and bringing a drug to market may take over a decade, right?
Sure.
In that particular setting, the studio's involvement is really deep and very, very involved. And they may seek to hold a really strong or even majority position on the cap table. In a business that, is maybe leveraging AI or is a B2B SaaS business, and what it really needs is to kind of get a preliminary product market fit, an MVP product and an MV team out to market before it can spin out. That incubation period might be 6 months or a year. And so the capital requirements may be different. I can tell you that, there's no right answer, but follow-on investors typically have shown an affinity for studios that have a relatively lighter position on the cap table. We think 20 to 25, 30% is a very reasonable number. But again, it would vary by stage and the level of intensity.
Totally makes sense. I think especially for any founders who are listening to this and are thinking about pursuing a studio, appreciate that, investors are taking risks. They need a return. And
That's right.
Depending on the scope of services that they're going to provide, it makes total sense. It's going to dictate what they should get in return. Any stories, whether success or maybe not as much success as was anticipated, that you can share with us, in terms of like just key lessons that you've picked up on over the years?
So many. I mean, just so many. One thing I would say is, if you're wondering if a venture studio is the right avenue to go down, either as an investor, or as the talent side of the equation, I would say to really read up on it. One of the things that I love about the founder's journey within a venture studio is the focus that you can have, right? So if you're playing on the founding team within a venture studio born startup, right? Many times your need to go out and raise capital is greatly diminished for that period of time. It's really about proving product market fit, build product, ship product, sell product, and prove that the concept works. And so, going back to my experience as a founder of bootstrap startups or working inside of traditionally funded VC-backed startups, there are so many other jobs that you've got to do, in addition to building product, shipping product, and selling product. And, what's so great about about living in a studio environment is that you can clear a lot of that focus for a period of time. Go prove that the thing has legs, and you've got help around you to deal with those other issues. They can become very noisy if you don't have that in place. And then for investors who are looking at the studio model, and I get to talk to lots and lots of folks, what I would say is understand that it's just a different model than maybe being an LP in a venture capital fund, right? Or investing in a standalone startup. There's tremendous upside. Studio-born startups are proven to outperform traditionally funded startups on a number of really interesting vectors and comparison factors: speed to market, speed to financing, speed to exit, being chief among them. And so, what you're really investing in is a layer above the startup, right? You're investing in the infrastructure, the utility that launches them. And so the way that you would diligence that entity would be different, right? You would look for operating attributes in the team that are different than just, can you scale a startup? It's, can you teach others to scale a startup? And so I would just say, understand that this is a different asset class and one that needs to be looked at differently.
So love to unpack the founder side for a moment.
Sure.
When you guys are evaluating founders, do you guys have a due diligence profile that you're looking for? Anything rigid, like must be this? Love to hear if you've now seen a pattern among founders that are really suited for this environment.
Yeah, I'm among the most optimistic recruiters that you'll ever meet. And so the question is probably better for some of my partners who are really good at talent evaluation. I can sell myself into believing into somebody very easily, candidly. That's been an anchor and a wind in my career, just to be clear. But the answer is yes, absolutely, we do. And here's something interesting about a studio, a nuance that you may not that the audience may not necessarily quite have their head around just yet, is when a studio is sourcing a founding team, they've already got the concept in mind. They've built the business plan. They're looking for a special kind of group of people who can go attach to this plan, make it their own, right? Invent against that thesis and take it forward. And so it's a slightly different setting than one in which a venture capital firm might evaluate a founder who's coming in with a startup that they're pitching, right? And so it's a little different. Oftentimes there might be somebody like an EIR, an entrepreneur in residence, who has kind of stewarded that venture forward, or even a venture partner. I've gotten to play that role a couple times. And so sometimes there's that initial sort of kernel of a team, but it's definitely a different setting.
I would, correct me if I'm wrong, but I would think then if you're looking for that founder or founding team, then if you already have an idea in mind, that you're really looking to match someone who's got experience that complements the idea. And for that reason,
Yeah.
Any founders who are interested in pursuing this should appreciate that's the case. You can be great at founder-led sales. You may have a track record of successful exits, but if it doesn't necessarily marry up to the idea, don't take it personally.
That's right. Yeah, that's right. I mean, the last thing you would want to do as a founder or as a hired founder is attached to the wrong concept or the wrong idea, because if you've really got a great point of view and a grasp on some element of value, there's going to be other opportunities. I heard an interesting statistic today, actually, and it was published by Max Pog, who just put out his 2025 studio research. And I can share that link with anybody after the fact, but it takes about 200 concepts to create an exit in a venture studio environment. This is data that came from their research. So I can't speak necessarily to the sources. I know they had several hundred folks respond to it from the studio space. So yeah, if you're not feeling like you're necessarily a fit for that particular venture, say so, because the relationship may persist until there's one that's a great fit. I'll talk about this for a second. You asked about the attributes of a great founder in a studio-led environment. One might think that vertical expertise would be that core kind of element, that core attribute. They wouldn't be wrong, but that's not it, right? So, if a fintech launch is imminent, must you get a fintech operator? Not necessarily. It could certainly help commercially, right? It could certainly help with go to market. But some studios bring go to market and commercial relationships forward. That's their value add. But there's also a horizontal level of experience and perspective that can be really important. So, have you built product? I find product managers make great startup leaders, right? Because building a product from scratch, from the studs up, so to speak, is very similar to building a startup, right? And can you manage a process that is typically ambiguous and bring great clarity to it, right? Those are going to be attributes that are going to be really compelling. And can you be unrattled by operating at sort of the peak of ambiguity and slowly chipping away at that and gaining greater clarity? So that's, those are some of the things I would look for, but there's lots.
Yeah, that mirrors my own experience. So today, we work with about 50 different early stage companies, and there's a theme. Generally speaking,
Sure.
that you see if one of the founders is leading, the product development efforts and really just knows the problem that they're looking to solve so well. Obviously, a whole bunch of other considerations. Really big one that I see, and you touched on it, and that's just founder-led sales. We're really big components, up until the point where you see repeatable processes. But it could be hard. I think one of the reasons I'm honing in on these questions is, I constantly, well, one, it's been a recurring theme on the podcast, but two, constantly get asked questions from founders, like, hey, where do I need to be strong? And it's appreciation. You're going to be asked to do a lot because there's a lot that needs to be done. But knowing the problems you're solving and how your product or service addresses it, totally agree. There's value in knowing your space because you need to know your buyers. But if you can bring, complementing experience on solving issues, I've seen now a whole host of clients who fit that bill. And totally makes sense. But you're right. I mean, there's no getting away from it. And especially in the beginning, if you're in an environment where you can focus on sales and not have to worry about some other things to begin with, that's a big deal. Because sales, cash is the lifeblood of a business, as we all know. Businesses go out because they have business because they don't have cash.
It is. There's a saying with quarterbacks and point guards and startups as well, but you can't go broke making a profit. And it's an important element, especially in complex and changing capital environments, like when rates change, right? Simple concept, but one that has gotten a lot of press for a long time and has certainly impacted lots of businesses, some that I've been involved with, others that I haven't. But I think that's one thing. The other thing that is important is, selling is important, but confirmation bias and specifically avoiding it is important too. So many times when you bring a business to market or a product to market, you're going to want to hear from the market that it's a fit.
Yeah.
And so you're going to bias yourself toward hearing that. And you have to be very careful to hear it all, right? Because the difference in in execution, which has tremendous product market fit and shows great empathy for the user, and being good at selling can be very difficult to recognize early on. But at the end, but later in the business, right, when it's not necessarily just relationship selling, but it's actually product-led growth, you're gonna really want to have heard the customer, the voice of the customer in that process. And so, it's interesting. We've honed in on founder-led selling, so important, but also founder-led empathy, right? And being able to understand what makes the product, the service, whatever it is that you're taking to market better and more
Yeah.
scalable is really important. And I think a studio helps with that, because a good one, right? The ones I want to work with are going to encourage that. They're going to ask tougher questions than did you sell, right? Did you get sales this month? I want to know, like, did the sales you got last month persist?
Yeah.
Right? What's the net promoter score look like on this? Did they tell their friends, right? Are they finding new ways to use the product? Are they asking you for more features, right? What is the depth and intensity level of their usage of the product? And that's so important because, like, you know, um, we
100%.
might be able to charm our way into some sales, right? But did the product actually do its job to perpetuate that, to persist?
100%, and it's been my experience that it kind of what reinforces your point. Some of the best product managers that I've known
Hmm.
are 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 zealots when it comes to engaging their customers and
Right.
saying, "Hey, tell me the truth. What's hitting the mark and what isn't."
Hmm.
Uh, and the absence of knowing that, how are you going to achieve the holy grail of product market fit? I'd
Right.
argue it's really hard.
Right.
Because you're right. I mean, charm will get you maybe open the door, but
Hmm.
not in the long run.
Yeah.
100%.
Yeah.
Um, so it's interesting. I just heard you touch on some metrics. I think I heard in there, where you explicitly mentioned net promoter score. I heard something that resembled expansion revenue. Would love to know, any metrics in particular at any stage that are top of mind when you start to evaluate, the consequences of decisions.
I've got a partner who's a PhD economist. Uh, I work with some of the most analytical and sharp people with regard to metrics measurement, and I am kind of, I wouldn't say I'm all gut, but I'm much more of an empath. And so, which isn't to say that I don't have a tremendous amount of respect for it. All right, so here's what I would say: at the unit economic level, whether you are bootstrapping your business or looking to have it funded by an external source or both, right? Maybe it's some hybrid, and that could be debt, that could be equity, whatever, right? It is so critically important to know your basic unit economics. That's the first piece. For many businesses in today's economy, the unit economics are really defined by the longevity of a customer, right? Which is very difficult to know early on when you launch, right? Now, if you sell washing machines, that's a different thing, right? You sold them a washing machine. And if you do a great job servicing that relationship and staying in touch with them, you might get to sell them their next washing machine, right? Or if you're a mortgage banker, 7 years from now, you may refi it. But if you sell an insurance product or a software product, anything with a subscription, right? Your relationship with the customer doesn't end with the sale, it begins with the sale. And so understanding the predictive modeling and then the performance modeling of retention is really important. The reason that it's important for a lot of reasons. One of the reasons that it's very important is that it's incredibly difficult to understand what you can spend to bring a customer on if you don't know the long-term value of that customer, right? And so I would focus anybody who's in a sort of prolonged relationship with their customer to get really tight on their lifetime value divided by their cost of acquisition. That's really the unit economics of a lifetime value based business. And I think if you can dig in and sort of slice the data a bit, you can begin to understand customer populations that represent greater or lesser LTV wins. And then you
Yeah.
can adjust how you might market and acquire those customers. So those are ones that really matter. I like um, in businesses that sell their product through the hands of salespeople, right? I like to track funnel metrics, right? Like, is it an elongated sales process? Is it a considered purchase sales process? Is it a kind of a one call close? Right. I like to dig into those because again, I think a lot of folks or a lot of businesses misunderstand their sales investment as kind of like a foregone conclusion. Well, we must do this to close the deal. But sometimes you will discover, if you understand A, the longevity of your customer, and B, kind of what your funnel looks like, you may be able to pull levers and sell through different channels, right? So having some of that data is critically important. And then I just, always want to know how much runway I have, right? How am I doing in terms of my ability to really scale this? So those are metrics that I would focus on.
It's interesting. So 100% agreed. We also look at return on customer acquisition costs when we're talking to customers. Generally speaking, we're using an ROI of at least 3 as a floor. If you're below that,
Mm-hmm.
I want to know why.
3x, yeah. Yep.
Agree on the pipeline. It's one of our big focus too, is just like on CRM discipline.
Mm-hmm.
How much of this is real? And if it is real, what's the probability? When is it going to close? So I couldn't agree with you more. Great investment of time. What was the last one that you said? It was one other one. Oh, runway. Yeah.
Runway, yeah.
Next question on that. So it's interesting. You referenced earlier interest rates. One of the things that I've found now talking to professional investors is, yeah, there's now a bigger emphasis on profitability, just given rates are
Mm-hmm.
high.
Yeah,
But that they're
yeah.
willing to yield if the growth is still there. Would love to get your take, on how you're thinking about being in the black relative to, a company that's really firing all cylinders.
Yeah, look, it depends on the thesis, right? So I'm super indifferent. And I know that might sound crazy, but you know, the work I do relates to so many different kinds of theses. So, if I'm working on a studio, uh, and the thesis is to build unicorns, right? And the capital is there to support that, then I'm really concerned with unit economic profitability and scale, right? Um, I'm a GP. My partners and I are GPs in a studio. We talked about it earlier. That is entirely cash flow focused. The mandate when we launch a new business is that it be break even within 18 months and be EBITDA, considerably EBITDA contributing shortly thereafter. Those are the businesses that we launch. We launch those in a high interest rate environment. And the comment was, nothing is more attractive than a fundamentally sound business, right? And acquirers are going to be very interested in that. And it's fascinating, as we get out of this period, which we're now a few years removed from it, of like grow at all costs. The idea was money was so cheap that
Sure.
power law investing was relatively easy to do, right? Make 20 bets, and if one becomes a unicorn, it's the rising tide, and if you were lucky enough to be an Uber or Tesla or Facebook or whomever, right, at the right time, then you did great. I don't have like beef with that investment strategy. I just tend to operate a different one, right? Which is focus on thesis and build and de-risk ventures in a very controlled environment, prove their market, and then take them out. And I think that in the long run, that's a different and to me more appealing way to do it, right? But again, it really depends on thesis and the amount of backing and runway that's available for the venture.
It really is great to hear, because one of the things that we're looking to achieve with the podcast is just, help founders appreciate that they're investors like yourself, and that's how they think, and whether you like it or not, it's no longer growth at all costs. You really have
Yeah.
to appreciate you're running a business, and there's going to be people who are only going to, look to work with you because you're sensitive of your longevity and whether or not you got actually something on your hand that can generate a profit. I think it's great.
Yeah.
Um,
Yeah.
so we're building on trends. Obviously artificial intelligence making its way into a lot of different businesses. Would love to get your take on how you're thinking of it relative to, augmenting features and functions or point solutions, relative to, like actually just AI being the focus on solving a problem.
Yeah, it's incredible. It's absolutely incredible. I was a pretty tech resistant and AI resistant person. Um, and then I became partners with a partner with these guys and watched the way they use um, generative tech and the way we've built generative tech. We've got some products in market that I believe are absolutely game changing, and I get to hear, just about every day from users of those products in terms of how they're changing the game. Um, I'll stay general for a second here. And part of the reason I'll do that is that the pace of change is so significant, and there's a little bit of a lag between the recording time and when this will air. And so, as excited as I am to sing the virtues of our products, I can only imagine what they will be with more use and more growth when this airs. So I would just say we've built some products that rapidly advance the way that capital allocators can collect intelligence and diligence the assets that they're looking at. Those might be IP assets or ventures. And so when this airs, happy to share the updated story. All right. So in terms of like AI at large and my impressions of it, and let me just give you a caveat. My favorite technology is a rowboat. All right. So like I'm old school, right? I am a very hands-on, outdoorsy, not a coder by trade, right? So that's the sort of the caveat emptor there. My take on generative technology is that we are in the midst of another industrial revolution, right? And what's interesting is there's a guy in our town in Bozeman, Philip Britton, who I heard say this, that the things that seem really new aren't maybe all that new. The way I think about technical advance and industrial revolution is to think about simple machinery, right? And if you take a far enough look, what we're really talking about here is leverage,
Yep.
right? Not to use too frequent a buzz term, but that's what this is, right? Can I make a really hard job less hard? Can I lift a heavier mass, right, with less effort? And if I can, do the economics work that I would pay for that convenience over and over and over again? And in AI, we have that, right? We absolutely have that. And so I absolutely believe it's here to stay. I believe it's very important for people and businesses to implement it smartly into their businesses and to their day-to-day. I don't believe the AI is coming for us, but I absolutely believe, excuse me, that it will pass us by if we are not willing to keep an open mind to it and to lean into using it. I think it's critically important. In terms of like, sort of what is what and what types of AI are what types of solution. To me, I'm still kind of in that, is it a co-pilot or is it an agent camp? Right. And the way that I define those is that an agent does my job for me or does a job for me based on the instructions that I provide it. And a co-pilot does elements of my job for me based on the instructions that I provide it. And I think that we're being constantly surprised by how many um, how many technologies can actually be agents for us if we trust them. But there are industries, yours, mine, others, where we'll probably be more comfortable adopting a co-pilot than we would an agent, right?
That's a good
We don't,
description.
what's that?
I haven't heard it framed like that before, and that's actually brilliant. I think I'm going to borrow it.
Hey,
That's,
I mean, I borrowed it from somebody too, I'm sure. So yeah, co-pilot versus agent. And then I think, that I'm not sure if you're familiar with the term of the Overton window, but like, um, we can only perceive what we can sort of see outside the window. And so when we hear about or learn about these rapid advancements in technology that sit outside of our perspective, it's very difficult for us to conceive of them, for us to believe in them. And that's where that sort of expansion of consciousness comes in. Maybe we test the waters by asking ChatGPT what our grocery list ought to be. And then we get into more evolved questions.
yeah, and I really like your leverage reference. Up until this point, I've been using productivity, but in the
Mhm.
context of an industrial revolution, you're right. It's kind of funny. I found myself in a conversation once. Someone asked, "Well, why do we have kings?" And I was like, "Well, if you think about it, a king was
Yeah,
they were leverage." In so much as if you needed something heavy that needed to be moved, a king was in a position to organize
he
capital,
could move it.
people to
Hmm.
move it. And then,
Hmm.
what do you know? We created an engine, and all of a sudden, arguably, you didn't need a king because the engine can do the work of all the people who the king was organizing. And we knew what happened after we had a steam engine and now a combustion engine. And I think of AI in the manner you're describing. I mean, the productivity gains that we've just started to see.
Hmm.
2 years in is when OpenAI released ChatGPT is material.
Sure, sure. I mean, I think we've been using AI for a long, long time, before ChatGPT, but yes, absolutely. I mean, auto correcting, word processing was AI, right? But yes, yeah. I mean, the pace of evolution is just incredible. I mean, it's
Yeah.
just wild.
Well,
Yeah.
I get totally great point. I guess I think in terms of the masses and accessibility. But you're right. I mean, it's material and it's here to stay.
Yeah.
I really do like this idea of thinking in a framework between co-pilot and AI agent. Um,
Hmm.
and I think it's a great lens to be able to evaluate opportunities, but then
Yeah.
whether or not you can also shift things from the co-pilot to the AI agent bucket. That's great. I mean,
Yeah.
that's
Yeah. Look, I would say so. It's a good way to think about it in terms of how you adopt it too, right? Is just to say like, hey, am I outsourcing this work, right? These calories out to something I trust to get that done in a high fidelity way? Cool, that's an agent, right?
yep.
Um, am I instead saying I need a workbench, right? Like I need some leverage. I need some tools that can help me get to 60% on this project, but there's no way I would trust it to do the rest, right? And there's just no shame in that game, right? Like honestly, so my son, um, I coached my kids' basketball team, so I had three eighth grade boys in the car last night when we were driving to practice. And he's like, Dad, what would you do if you found out that I used Chat GPT to help me write my paper? And I was like, I would say, of course you did. And he's like, what? You would let me do that? And I said, absolutely, 100%. I would be concerned if you didn't use the technology and leverage available to you to start at a better place so that you could end with a better product. And he's
Yep.
like, will you tell my teacher that? I was like, yeah, sure. Right. Like, of course I would. And I said, now, would I tell you to use it as an agent? Of course not. I would tell you to have a dialogue with it and say, hey, I want to frame this argument with this data. By the way, is there better data? right? Like that's how I was thinking about it. And he was like, really? He was shocked, right? He thought that I, wanted him to write it with a number 2 pencil and then type it on a typewriter or something, and not at all.
Good, great analogy. I'm sure he's wishing he asked you earlier.
Yeah, totally.
JT, been a great podcast. Before we wrap up, last question. If you had an opportunity to go back and talk to your younger self, counsel or advice that you'd give?
I love these questions. Yeah, so I would have started my entrepreneurial career earlier with a lower cost basis, for sure. I would have moved to Bozeman, Montana the first time it came up, which was about 20 years ago, for sure. And what else? Gosh, I would, yeah, I guess I would say take it easy. It's a long haul, and you learn just as much by failing as you do by succeeding. I think lots of people, come to me and ask me how I found success, and the answer is, I've taken a lot of shots, and so sometimes I felt like I needed those to hit in a way that I really didn't, and lots of them did, right? But like, just accepting that failure is on the critical path to success,
Yeah.
I think is something I would have leaned in on, as early as possible in my career. Yeah, those would be 3. I mean, there's so many, right? There's so many, but those would be 3 that I would really focus on.
Nice sage advice. That's awesome.
Thanks.
Good stuff.
Yeah.
JT, if any founders, LPs who are interested in getting a hold of you, how can they find you?
Yeah. I'm easy to find. If I'm in the room, I'm the tall, loud one. But in virtual settings, LinkedIn, I'm just JT Benton. And you can find me on our website, 9point8.co. I'm eager to chat with anyone who's got an interest in this sort of value creation, venture building space, and the parties that you shared, right? Those 2 stakeholders, LPs and founders, I think are great. Studio operators, service providers to small businesses. One of the things I'm very focused on is building as big a tent as we can for the people who are willing to take that early stage risk and support them. So even if it's not directly in thesis for me, would love to know more about what folks are up to and how I might be helpful.
Awesome. Great. We'll get a hold of JT. Obviously knows his stuff. Super sharp. JT, appreciate your time. Thank you. And
thank you.
It's another episode of the Innovators and Investors Podcast. Thank you for your time. Take care. Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you're a successful founder or an investor who would like to be on the podcast, please visit podcast.finstratmgmt.com. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. If you'd like to know more, go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @finstratmgmt. This is Kristian Marquez. Thank you for listening. Until next time.